Right now, someone across town is paying less than you for the exact same thing. Same product, same city, same day. And it's not a glitch, it's not bad luck. It is by design. And once you understand how it works, you will never look at your wallet the same way again. Let's start with a number. Studies estimate that being poor costs an extra $1,000 to $3,000 per year just for being poor. Not in obvious ways, not in ways that show up on any government chart, but in 1,000 invisible taxes that drain money from people who can least afford to lose it. We're going to break all of them down today. But first, I need you to understand why this system exists, because it wasn't built by accident. It was built slowly, quietly, by the people who benefit from it most. Let's follow the money.
Point 1. The bulk buying trap. Here's the first way the system charges you for being broke: the unit price. A single roll of paper towels at a corner store might cost $2.50. A 12-pack at a big box store, $1.10 per roll. That's more than half the price for the exact same product. Over a year, bulk buying on just the essentials, food, cleaning products, toiletries, can save a household $600 to $900 a year. But here's the catch. Bulk buying requires cash up front. It requires storage space, and it requires a car to get to the warehouse store in the first place. If you're living paycheck to paycheck, you buy small, you buy often, and you pay the poverty premium every single time. Rich people don't save money because they're smart. They save money because they had money to begin with. Point 2, the insurance paradox. Now let's talk about insurance, and this one is going to make your blood boil. Insurance companies don't just charge you based on how likely you are to make a claim. They charge you based on your zip code, your credit score, even the type of car you drive. What does that mean in practice? 2 drivers, same age, same clean driving record. One lives in a wealthy suburb, $900 a year. One lives in a lower income urban area, $2,200 a year. Same risk, different price. Because the system prices the neighborhood, not the person. And it gets worse. Own a newer, more expensive car? Insurers treat you as lower risk. Drive an older, cheaper car?
Higher risk, higher premium. The less money you have, the more you pay to protect the little you own. Point 3, the credit score machine. This next one is the engine that powers almost every other poverty premium on this list. Your credit score is supposed to measure how responsible you are with money. But what it actually measures is how much money you've already had access to. Here's the trap. To build good credit, you need access to credit. But to get access to credit, you need good credit. And if you were never given that first credit card, that student loan, that car payment in your name, you're shut out. A person with a strong credit score borrowing $15,000 for a car might pay 4% interest. Someone with poor credit, 18% or higher, on the exact same loan for the exact same car. The bank profits more from people who can afford it least, and it's all perfectly legal. Meanwhile, wealthy clients, banks compete to serve them. Lower rates, no maintenance fees, dedicated advisors, free wire transfers. 2 people walking into the financial system, and they're playing entirely different games. Point 4, negotiating power and the cash premium. Here's one most people have never considered. Cash gives you power that credit simply can't buy. When you buy something with cash, a car, a property, even furniture, sellers will often take less in exchange for the certainty and speed. Wealthy buyers know this. They use it constantly. In real estate, a cash offer can beat a financed offer tens of thousands of dollars higher, simply because there's no risk of a deal falling through. If you have no cash reserves, you pay full price. You finance it. You pay interest on top. You have zero negotiation power. Every single purchase costs you more, not because you're paying more per item, but because the absence of options is a tax in itself. So let's add this all up. Being poor costs the average household somewhere between $8,000 and $14,000 more per year compared to someone with wealth doing the exact same things. That's not a spending problem. That's not a discipline problem. That is a structural problem. And the first step to fighting it is knowing it exists. You now know what most people will never understand. The poverty premium is real, it's measurable, and it's beatable, but only if you see it clearly. Buy in bulk when you can. Build credit before you need it. Learn what you can deduct. Hold cash whenever possible. Understand the system before it understands you. None of this is easy, but now you know the game. If this opened your eyes, share it with someone who needs to hear it, because the best way to fight a system designed to keep people unaware is to make sure nobody stays unaware. The rich get richer because they know these rules. Now, so do you. So now you can subscribe me because you learn what I want to explain you. So goodbye until my next video comes into your feed.